Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Here it is for an example, the ISE, as you see this chart in front of you. This is the ISE's Euro currency index. It's an index and options on the index. It's based in U.S. dollar. So it does the opposite. If you're a spot Forex trader and you look at this and you say, what the heck is this? You know, the Euro currency is 68.47. No, it's the U.S. dollar versus the Euro currency. So it's an inverse or a mirrored reflection of the Euro currency pricing. Now, what I wanted to show you and what you are looking at with these channel or dots is person's pivots. And we'll get into that in just a little bit. And we've done some presentations before showing you person's pivots. This is the monthly numbers. And as you can what person's pivots literally is a filtered method of using pivot point analysis to give me a market condition, what the direction of the market is, bullish or bearish, and under those conditions, what the potential range might be. And so if the market breaks out, as we saw over here in this area, if we break out of the predicted market condition range, then we can therefore anticipate if the market's breaking out, it's no longer looking to be in a bearish mode. We're looking to be bullish. And that's where sometimes we can use seasonalities to help us to uncover what is the normal tendency of this currency versus the U.S. dollar doing. So I just wanted to show you, this is the chart, as you can see here, it says off of TD Ameritrade. This is a chart that's directly off of Thinkorswim or TD Ameritrade's product and charting package right now. Person's Pivots is available as a standard. It's not an extra charge. It's just there on their platform. And how I use it is to identify, what's the market condition, and under that condition, what's the potential range. Now, this chart was done, this is a monthly chart. This was put together as recently as, I believe, Monday's trading session. So as you can see, the whole month of September, we've pretty much stayed contained in the predicted range of this market. So how can we utilize this type of information going forward? Well, pivots, as we use here, are predictive in nature. In essence, we take and utilize last month's data points using the high, low, and close and use that in a mathematical calculation to forward predict what the month of October, A, condition is predicted to be, whether it's bullish or bearish, and B, what the price points of support and resistance are going to be. And with that information, I can then make a better gauge not only of my leverage, how much size do I want to put on if I feel comfortable with that trade, if I do other research and if it matches up with some of my macroeconomic studies, then I really can look at the trading plan a little more effectively. I can say, okay, if the market is deemed to be bearish next month, then if the market rallies to a predicted high, then I can determine what size of my position I want to put on. And therefore, I can also, with that knowledge, be able to say, okay, if I am wrong, if I'm wrong on this trade, what am I willing to risk? At what point am I wrong on this trade? And so using the person's pivots and using other forms of analysis, I'm able to say, where do I want to enter a trade? How much leverage do I want to use? And most importantly, once I have that information, then I can say, well, maybe I choose to use options. What strike prices do I want to go with? And so therefore, I'm able to kind of select the right strike price. And then with the outlook, whether it's bearish or bullish, if we're looking at a bearish outlook, the market rallies to my predicted resistance, I could look at what the predicted support might be, and that will give me a profit target. And for options traders, you guys out there, you know as well as I do, that's half the battle. Is getting into the trades are easy. It's getting out that's the problem for most people, whether you're winning or losing. And if it's a losing trade, a lot of people get real stubborn on losing trades. And technical analysis and looking at the market and looking at our environment right now, folks, we are all in the same boat right now because none of us has traded in this type of an economic tsunami, so to speak, ever before in history. And certainly, I've only been in the market since 1977. If some of you are not familiar with my past, I started literally trading futures, and I began on the floor of the Chicago Mercantile Exchange in 1977. I later started to work with George Lane, who is credited with developing the stochastics oscillator indicator, and so I had really started to utilize technical analysis some 30 years ago. For me, I really was interested in the financial markets rather than the agricultural products, and I started trading, and I heard Steve mention earlier about how the European Eurozone, you're trading one currency now, not individuals. Well, back in the day, I remember trading German Deutschmark. We would trade the Japanese yen, which is still available today. So I'm used to trading foreign currencies for, since around 1984. But now with the Eurozone trading one currency, it's kind of intriguing that we have all kinds of opportunities, and specifically what's been going on recently with the British pound and the Japanese yen, looking at the breakout that we've just seen. And with the ISE, you're able to take advantage of some of these major pairs and also cross trades, as we'll show in just a second.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.